Well, hi, and welcome back to OnlineNetworkCoach.com. I'm your host, Stan Hashey, for this session on income tax deductions for your home office. Now, I started my career as an accountant, and I can tell you that I hated accounting, and I still do. But I did learn a lot, and it has served me well in the business world. How would you like to put hundreds and possibly thousands of dollars into your pocket every year without any effort whatsoever? Well, maybe just a little bit of effort. Believe it or not, you're not getting back the income tax returns that you deserve. And it's because you're not asking for them. A home-based business has got to be one of the best financial decisions that you've made in your life. Your employer actually uses you as a tax deduction. And all you're doing is taking his place. So, the government is way ahead of the game, encouraging you as a small business operator. Don't think about incorporating a company until you start bringing in some serious money, contrary to what most accountants will tell you. You should open a separate bank account for your new business to keep all of your business-related expenses in a separate folder. You'll be glad you did later on. The first step in claiming deductions is to determine whether your network marketing activities are considered to be a real business or a hobby. Now, the IRS states, generally, an activity qualifies as a business if it is carried on with the reasonable expectations of earning a profit. Incidentally, the laws are the same in Canada and the U.S. In Canada, they simply pay more taxes than the U.S. because of comprehensive services such as health care. The IRS presumes that an activity is carried on for profit if it makes a profit during at least 3 of the last 5 business years, including the current year. If you're not sure about all of the details, go to the IRS and get the information, or you can stay with your coach and download a print copy from our website. The first thing you should have in running a business is a good agenda like this one. It's not only totally essential for setting appointments, it will be very useful if you ever get called in for an audit. Now, it justifies the expenses and shows where you've been at a glance. You should also have a weekly expense sheet like this one. Now, I put this particular sheet to work in practically every business I've consulted to. Attach all of your receipts to 52 of these in a year, 1 for each week. You'll cut down your accounting work and will make your life a lot easier. Qualifying for the business use of your home. You must be able to demonstrate that you use a specific portion of the home exclusively for business purposes. In other words, a laptop on the corner of the breakfast table does not qualify for a home office. If you have a specific place in the home where the business, a computer, fax machine, and desk, filing cabinets, and materials are located, the expenses associated with maintaining an office within the home are generally allowable as a deduction for income tax purposes. The next step is to determine the percentage of the home that is used exclusively for business purposes. Let's say that you converted a 400 square foot room for an office area, and your house total square footage was 2,000 square feet. Your business usage percentage would be 20%. You get the idea. And by the way, it can also be part of a room where if the area is used solely for business purposes. Now, that means that you can take 20% of depreciation, home insurance, home repairs, home security, utilities, property taxes, mortgage, interest, and rent if the apartment is rented. Now, here's an important issue. Expenses associated with maintaining an office in the home are tax deductible in the year incurred, provided that such expense do not exceed the gross revenues associated with the business. All of your office supplies, including pens, paper, printer, cartridges, notebooks, are all 100% tax deductible. When deducting equipment needed to run your business, such as the office furniture, office equipment, computers, and vehicles, you have 2 options when claiming these on your network marketing taxes. You can claim all of the equipment expenses in 1 year, or you can choose to claim them over several years. Computer software, business subscriptions, all 100% deductible. And so are your starter kits, website, internet connection, business and promotional materials, handouts, samples, and products. We already know that you can claim your vehicle used for business purposes on your network marketing taxes, but you also can claim your business mileage as well. Now, the important thing is to keep accurate records. One of the ways, if you're using it only part-time, put a small booklet above your sun visor and mark your business mileage down. Now, don't throw away your gas receipts because you charge mileage. They are an excellent proof of where you've been if you're ever called in for an audit. Now, attach these to your weekly expense reports. Tally up the total mileage used for business and multiply by, presently in the US it's 55 cents per mile and 52 cents per kilometer in Canada, but you should check because these mileage tariffs vary constantly. The tolls, taxi, and parking expenses are also deductible. So if you drove 15,000 miles and 1,000 of those miles were business meetings, events, and so on, you can only deduct the 1,000 miles. Now, remember to include the repairs and insurance, and portion of all of the car expenses are also tax deductible. Your business phone and your cell phone used for business calls are 100% deductible. And so are service charges. If you're starting out and using the family line, you can deduct a portion of that cost. And long distance calls for the business are 100% deductible, even on your home line. Travel and meals, all of your business related expenses like hotels, airfare, train, bus, and taxi are 100% tax deductible as well. And so are tips, by the way. So keep in mind that you can only deduct 50% of your meals when you're traveling for business or meeting with a client. If you're charging to an employer, you can charge 100% on your expense account. If you're building a network marketing business full-time, chances are that you're paying for your own health insurance. Again, your insurance premiums are 100% deductible. All contributions you make into a retirement account are 100% deductible. If you don't have a retirement account, there's no better time than right now to start one. In Social Security, you're allowed to claim 50%. It's essentially the portion that your former employer was paying of your Social Security payments on your 1040 form. Now here's a vastly overlooked item. If you operate your network marketing business as a sole proprietor or sole partnership, hire your children. If you pay your child less than $4,000 a year to work for your network marketing business, you may be able to avoid paying income taxes on this amount. Also, your child is younger than 17 years old. You don't have to pay Social Security taxes on this income either. And you can write the salary off as a business expense. You're already giving them an allowance anyway. You may as well take advantage of the deduction. In this session, I just want you to get a feel for what you could really deduct on your income taxes. And you should be checking with your accountant if you're not feeling comfortable with some items. And what I've done is I put a total report, including the expense account report and so on, directly on our website for you to download. All you have to do is to sign up for the newsletter, and we'll ship that off to you, and I'm sure you'll appreciate it. Now, it's totally free, and I won't be calling or soliciting you to buy anything. We're not going to give your name out to somebody else on the internet. Just let me know what else you may have in mind so that we may improve on the content in the future. Now, how's that for a deal? Go to onlinenetworkcoach.com, sign up for the newsletter, and I'll get that booklet out to you for free. Talk to you later.